Hey, what's going on, everybody? Welcome to the channel. This is kind of an impromptu video. I decided to invest some of my rollover from a previous employer. So just gonna walk through kind of how the Fidelity platform looks and feels. You can follow along. I'm gonna buy some mutual funds and ETFs today. So the first one that I'm gonna buy today is MDY. So this one is a mid-cap ETF. So this is mid-sized companies. An ETF is an exchange traded fund. So this is going to transact immediately. A mutual fund won't transact until after market close later in the day, but an ETF is now. It's instant. So let's buy some of this one. And my new rollover account, you can see what symbol I'm buying, MDY. And you have a buy or sell. What do you want to do? Self-explanatory. I don't want to buy the number of shares. I want to go by how many dollars I want to spend. So I want $175 worth. So you don't need to buy an entire share. You can see this is 588 bucks. You don't have to have that. If you want, you can buy as little or as much as you want. So you don't need to buy an entire share. But if you did want to buy a couple of shares, it's the same thing. Just type in 2 shares. You'll get 2 at this price. So it'll be around 1,200 bucks. But again, we just want a few bucks worth. So let's do $175. We're going to do a market order, which just means that it's going to execute at the price right now. So whatever market price is, when we hit buy, that's where it's going to price at. So it's going to be right around this 588.56. There's really no reason for regular investors to be, hemming and hawing over pennies. So preview order. And then all we have to do is hit place order. So it reiterates exactly what you want, what account you're in, what you're buying, how much you're buying, the order type, and time in force. What this means is if for some reason the order didn't fill, it's going to. If for some reason it didn't, this order would expire at the end of the day. So if you had a specific price on this that you wanted to pay and never got to that price, the order would just close out and not fulfill at the end of the day. So place order, that's it. And let's go see now if it's already executed, and I'm sure it has. And there it is. So we just bought $175 of MDY at market price. It was filled at, this is the price we paid, $588.25. And the amount was for $174.71. So when you buy fractional shares like we didn't buy an entire share for $588. We bought a piece of one. It might not be exactly what you want or what you entered. If you find this helpful, please consider giving me a like or a subscribe. It really helps the channel, and I'd certainly appreciate it. All right, next one I'm buying, FXAIX. This is one of my favorites. I've been buying this one more or less since I started investing. So this one is a mutual fund. So this one isn't going to execute right now. This one will execute later this afternoon or early evening after the market close. So the buy box looks a little bit different, but it's largely the same. We just want to buy instead of sell. And here you could set up a recurring buy. So every Friday when you got paid, if you wanted to do the same thing over and over again, you can set that up so you don't have to do this. And this time I want quite a bit more. This one, like I said, is the S&P 500. That's just America's 500 biggest companies. So you're going to see all the names that you know and recognize. Facebook, Google, Broadcom, just anything and everything that you can think of. The top 500 companies in America. So they're going to be a ton of recognizable names. So preview order again, and you'll see this time we get a warning or a message that says this trade will be completed at the next available price. So again, that just means it's going to settle after the market closes tonight. All right, so that one's done now too. And now when we go to look at our activity, you're going to see this one is open. And again, that's because it'll fill at the end of the night. If you wanted to, you could cancel it. If for some reason you changed your mind or you had a typo, if you had a typo on the ETF, the MDY that we just bought, you'd have to sell it. There isn't anything you can do. You can't cancel it. It's literally filled as soon as you hit the buy button. So the next one that I am going to buy today, this is a small cap IJR. So when they're talking about a small cap or a mid cap or a large cap, the cap means capitalization, market capitalization. And all that means is what the company is worth. So if you took the stock price and multiplied it by the number of shares outstanding, that would give you the total market cap for that company. So this one again, this one's another ETF. So this one is going to execute immediately. All right, we're going to do 350 on the IJR, the small cap. All right, that one. Next one, IJH. And this one's a mid-cap ETF. So again, an ETF, that one's going to close immediately. I'm going to do 450 on this one today. Market price, preview, place order. It's really simple, guys. So, and if you're, kind of wondering as I work through the rest of these, if you're wondering what you should buy You know, this FXAIX, SPY, VOO, these are all going to be very similar. They're all S&P 500 index funds. So if you're a starter, this isn't financial advice. This is just my experience only. But I've been buying this for years and years and years. And just think about it like this. When you are buying like an S&P 500 mutual fund, you are buying part ownership in 500 companies. And those companies, hopefully over time, will continue to make more and more profits, you know, population growth, more sales, et cetera, et cetera. And over time, they'll grow. That's the whole point of investing, right? So an S&P 500 index fund might be a good fit for somebody new. It kind of takes the guesswork out of it, spreads your money across 500 companies. So EZU, this one is a Eurozone exchange traded fund ETF. So this one will execute right away. And this one is just going to invest in companies in Europe, right? EZU, I want $300. All right, VEA, let's try to get these a little more quickly, and then I'll show you some other things on the platform, like where your dividends show up, what those are. Those are basically just payments from these companies. So as part owner, you get part of the profits, and that's what's called a dividend. Those usually get paid once a quarter, and we'll take a look at some of those I've had coming in recently. So VEA, I want 1,000. And we'll do market price again. So while we're here, VEA is a tax-managed developed markets ETF. So this is going to be developed countries, not emerging markets, things like that. And when they say it's tax managed, there's a lot of different international tax law, who pays what to which country and so on. And that just means that this is all taken care of for you. So all you have to do is just buy this one fund. And again, it's going to invest in hundreds of foreign developed market countries. Next up, VWO, Vanguard Emerging Markets Index. So on the last one, what I said is that those were developed markets. This one is now emerging markets. So these are markets that are experiencing rapid growth. A lot of businesses popping up, things like that. I'm going to do 525 on this one. So this is just a portfolio that I use. The percentages and things really don't matter. I just wanted to show you guys around. What's right for me isn't necessarily right for you. In fact, it might be a different strategy for you. Again, I just kind of wanted to show you around the platform. I'm 42 and I recently became, I guess, what I'd call semi-retired. So again, the portfolio that I use might not be the best fit for you. So VNQ, this is a Vanguard real estate ETF. So quite literally invests in real estate. So rather than you go out buying apartment buildings and houses and commercial real estate, you can just buy into this fund instead and they do all that for you. This one's a smaller part of my portfolio. And another thing I should mention is that I buy mutual funds and ETFs and other investments, regardless of the market is up or down. It doesn't matter. So over time, again, just think about what you're doing. You're buying shares of business. So even if it goes down a little bit, in the short term, over time, it's probably going to grow. And when you just buy it over and over and over again, you're just getting more and more slivers of ownership in that company. So what that means for you is more and more growth, more and more dividend payments, things like that. Next one. FXAIX, Fidelity Global Commodity Stock Fund. So this one is going to be commodities. Commodities are things like oil, could be things like the corn from the farm fields, any type of food actually, gold, silver, tangible things you can touch and feel. So this one's also a smaller part of my portfolio. Going to do $150 on this one. Place order. IUSB is a bond fund, a couple $100 on this one too. So bonds are not ownership pieces. They're not stocks, obviously. A bond is a piece of debt. So when you buy a bond, the bond issuer, the company that issued the bond, pays a percentage of interest to you, the bond owner. So a bond fund like this one will contain hundreds or probably thousands of different bonds. So you just watch me buy a handful of different ETFs and mutual funds. Again, guys, there is really no reason to not do this for yourself. There's a ton of different investment options out there. Like I said, FXAIX, SPY, VOO, all three of those are S&P 500 index funds that could be a great beginner choice for you. Again, they do come with risk, so just know that. But, the chances of it going to zero or something like that are also next to zero. So consider those if you want to start investing. So a couple other things. If we go to activities and orders, once your portfolio starts to build, you'll get more and more dividends, they're called. And dividends, again, are just a portion of the profits from the companies that you own. So in these mutual funds, the Facebooks, the Apples, the Amazons, some of them pay dividends. And when they do, again, it's just a chunk of money that they're sending to you. So let's take a look at a couple of dividend payments that I've gotten recently. And this is in a different account of mine, a different rollover that I had from an employer way back. So this one has some pretty decent dividend payments in here. So just as a reminder, a dividend is a chunk of the profits returned to you, the shareholder. You own part of the company, so you're entitled to part of the profits. And as you get more and more shares of these things, the payments will get bigger and bigger. Let's sort by amount. So back on October 3rd, I got a $628 dividend from FXAIX, the Fidelity 500 index fund we talked about. And then what I do is I use something called DRIP, D-R-I-P, a dividend reinvestment program. And what that does for me is it automatically reinvests that $628 right back into more of the underlying asset, the FXAIX. So it takes that $628 that we got paid and buys $628 more. So for free, so for me doing absolutely nothing, just from the shares that I already owned, I got a $628 dividend payment, and it bought me another 2.694 shares. So now the next time I get a payment, there's going to be another almost 2.7 more shares paying me also. So again, over time, as you buy more and more of these, that payment is going to grow and grow and grow. Another one of my bigger ones recently, back on September 23rd, was via the Developed Markets Index Fund. I got $478 for that one, and it immediately bought me almost another 8 shares. And again, this happens 4 times a year. So 8 times 4 is 32. So I'm going to get 32 free shares every year for doing absolutely nothing further. So all the more reason to buy and hold these things, right? Like that's what I try to tell people. These, you can't be in and out of the market. Buy them and hold them forever. If you're buying things like index funds, there's really no reason to ever sell unless, you know, you're getting towards your retirement or you need to use the money for something. But these are long-term buy and hold investments, guys. You're not going to get rich overnight. That's not how these investments work. They're investments. They're not gambles. If you guys have any questions, by all means, please leave a question in the comments. I'd be more than happy to try to help you out. Please like and subscribe.